Hey, good afternoon, everyone. So, let me first explain a few theory concepts and then we'll look at practical examples for some of the earnings which are going to happen this week. So, yeah, before getting into the session, again, as we all know, that any investment involves risk, right? Because there will be always some black swan events. Suddenly, there can be some announcements. So, again, whatever we are going to discuss, do your due diligence, right? Based on our experience, there is a possibility of 80-85% success, but it's not that there is no analyst, there is no strategy, there is nothing which will work 100% of the time. So, and past performance is not indicative of future results. So, yeah, please understand that any investment, whether it is stocks, options, futures, everything comes with a risk. And why you need to learn, why you need to take time next 30-45 minutes to learn, because we are making 80 to 85% consistent success with earnings since last 9 months. Every week, every month, we have around 80 to 85% success with all the earnings using different strategies. January, February, March, previous quarter, this quarter. So what are earnings, right? Many times I already explained. Every company needs to report their earnings, their future guidance, how much they made, what is the revenue, what is the earnings per share, what is their future guidance for the coming 3 months based on the requirements of SEC. So these companies generally report the earnings either before market open or after market close. Generally, these companies don't report when market is, that means before 8:30 a.m. Central or after 3 p.m. Central. Generally, these companies report the earnings. If the earnings are good, if the future guidance is good, that stock can move so much. If the Sometimes if the earnings is good but their future guidance is not good, that means they may say that, oh, because of inflation, because of tariffs or whatever reason, we see that the demand may decrease. Even though their past 3 months performance is good, the stock may go down. Sometimes there might be some good stocks where they may report good guidance, they may report good guide, right, till past last 3 months good numbers, but it may not be as expected, right? For example, let us say Tesla or some big companies, right, like where Microsoft, the people may have, traders may have a lot of expectation. Sometimes even with everything, numbers are positive, guidance is also good. If it doesn't meet the expectation, also it can drop. So there are different factors involved, but using some set of tools, we can make 80 to 85% success. So these are some of the companies which are reporting in the coming week, right? We have like Domino's Pizza reporting tomorrow morning. Then we have MGM Research, Opera Group, then Roper Technologies, Revity, Bank United, FMX. All these are reporting tomorrow morning. Then tomorrow after hours, right? But morning means they can report at 5 a.m., 6 a.m. Some companies will schedule at 5 a.m. Central. Some companies will report at 6 a.m. Some companies at 6:30 a.m. Anything before 8:30 a.m., that is called before open. Anything after 3 p.m. Central, that is the after close. So after 3 p.m., we have waste management, NXPI, FFIV, uh, uh, Paradigm, Nucor. Then we have Transocean, well, like that. Then on Tuesday, we have some major financial companies like PayPal, Sophie, Visa. Then we have Coca-Cola, Snap, then Starbucks. There are a lot of many, right? There are nearly 70 to 80 companies reporting in the coming week. Right? These are some of the top companies. Right? There might be over 300 plus companies. Right? Out of we have over 6,000 companies. So every 3 months, these 6,000 companies need to report. But out of those 6,000 companies, every month, every week, there will be 300 to 400 companies which will be reporting. Out of those 300, 400 companies, these are the top 50, 60 companies which are reporting in the coming week. So there are another 240 plus companies, but they are not very top companies or well-known companies. So website like Earnings Whisper, they report what are the top companies reporting in the coming week. You can follow their Twitter or something where they will show what is the calendar, or you can go to Yahoo Finance. There are a lot of websites where you can find the calendar for the coming week. So you know which companies are reporting, which can go big or which can drop after the earnings. So right? We have McDonald, we have Amazon, we have Microsoft, we have Meta, Qualcomm. There are a lot of great opportunities in the coming week, right? Especially Meta, Microsoft, Amazon, Apple. Then we have yeah, Starbucks, McD, lot of Spotify, ADP, right? There are a lot of opportunities. So, what is the major advantage of trading earnings? One is you don't need to look at the charts throughout the day. That is the major advantage, right? You take a trade, for example, let us say tomorrow after hours we have an XPI. You take a trade between 2:30 to 3 p.m., then close them on Tuesday morning, 8:30 to 9 a.m. So all you need to do is 5 minutes to take a trade, 5 minutes to close a trade. Or you see, let us say FFIV is looking good. Then you take a trade tomorrow before the close and just and close the trade at the market open. So all you need is 5-10 minutes to open the trades, 5-10 minutes to close the trades, right? So again, even out of this say 60, 70 companies, one more thing we can do is we can filter out more by looking at what is the implied predicted volatility based on how the price is moving, their implied volatility based on the current stock price. We can look at what is the predicted volatility of these 70, 80 companies. We can filter out further so that you are not looking at some companies where it may not make much move. It may move only 0.5%, or it may even after the report. If it doesn't make a move, right? If you buy a call or if you buy a put, in both the ways you will lose. So that's why it is also important. So first thing is already company like Earnings Whisper is telling you out of 300, 400 companies, these are the top 60, 70 companies. Out of those 60, 70 companies, if we want, we can filter out by looking at the predicted volatility, their implied volatility, because we need a momentum. After the earnings report, either they should go up or they should go down big. Then there is a high chance for us to make nice gains. So that is our step two or step one. Because, right, until here, you have all the information, right? You don't need to do anything. Only thing, right, what we need to do is once once you have all those companies, then what we do is we put them into some list like this, right? Okay, Domino's Pizza is reporting tomorrow before open. MGM is reporting before open. Opera is reporting before open. BKU, like that, right? These are some companies where the volatility is high, right? Out of 70, 80 companies, we are looking at, right? For example, I can filter out only which are above 3%. If it is 1% or 2%, I can we can filter them out. So data filter, right? There are over 57, 60 companies which are reporting. I can say that okay, if it is only 1%, I don't want to see it. If it is only 2%, I don't want to see it. Like that. So now we are only looking at some companies which has a high predicted volatility. That is our next step. So that is your step one. Then our next step is basically once you have that information, we'll go to the next step where shall this is our step one. Look at the stocks which has good volatility or which are well-known companies, right? You should know, right? If you know Domino's Pizza, you know about it. Or MGM Resorts, you know it is one of the famous companies in Las Vegas with lot of resorts. Or NXPI, it is one of the top semiconductor stock. Or Microsoft, you know it is very good company. Or right, Meta, you know it is very good company. So if it is a well-known stock, there will be a lot of liquidity. That means there will be a lot of volume, lot of buying and selling. So if you buy something which is completely unknown, you may not have a lot of, right, the spreads might be too far, too wide. You may not be able to make nice gains, or when you want to sell the contract, you may not have enough buyers. You may not get a nice price. But if you want to do Microsoft, Meta, MGM, or the big companies, well-known companies, you will have millions of buyers, millions of sellers to buy the trades or to sell the trades. So that's why either you should look at the implied volatility, predicted volatility, or you should know whether it is a well-known company or not. So when you have, right, once this step is done, right, out of 300, earnings whisper is giving 60-70. Out of 60-70, we are filtering to 20-30. Out of those 20-30 stocks, now we can use some set of tools and we can look at the confluence. We can see whether if all three, four different softwares are telling the same thing, then that is a good opportunity. If you get a divided opinion, two softwares are telling it will go up, two softwares are telling it will go down, that is a it's a risky trade. So better we avoid such type of trades. If confluence is right, if all four softwares are telling that oh it may go up, then that is a perfect opportunity. If three out of four are telling it may go up or it may go down, that is a good opportunity. But if two of them telling it will go up, two of them are indicating that it will go down, it is little risky opportunity. We can avoid such type of opportunities. And then, so step one, you understood, right? Basically, we look at predicted volatility and you filter out. Then step two is looking at. So now what we'll do is we'll use our softwares and we'll try to uh, do that, do this process, right? Find the confluence. So let us take some stocks. So first thing is I'll explain about one by one indicators or one by one softwares so that you understand how to look at the confluence. So this is our T5 software. Whenever this T5 software is at the bottom, that means there is a high potential for the stock to move up. Generally for earnings, we need to look in daily time frame, right? Because it is a major event. Instead of looking at 1 minute, 5 minute, we look at a higher time frame like a daily time frame. So we look at T5 software to see whether the stock is at a top or at a bottom. At a bottom means that means it is already oversold. There is a high possibility for it to go up. If a software is already at a top, that means it is overbought. That means it can go down. So that is your first software which you use, right? T5. I hope everyone is clear with that, right? If anyone has any questions, so all we are looking is if it is at the bottom, it is a good candidate to buy. If it is at the top, it is a good candidate to sell. That is the first software. In the same way, we have second software, which is our RCT AAA, which is also similar one. If it is at the top, that means there is lot of sell off happening. If it is at the bottom, then there is a high possibility for the stock price to go up. So this is another software which will give us the confluence. Then we have another software called DV, right, which will give us the divergence or which will give us the volume, how the volume is moving, what is the delta variation, right, how the delta, all those things. So if you see here, whether the volume is going up or going down, you can see, right, on 3 4 days back, 3 days back there was minus 43.35 million orders, right? That means there are a lot of sell orders here. On Wednesday, on Thursday it increased to 30.8. That means from sellers it is becoming buyers. From 30.8 it is becoming 25 million. Or the cumulative volume was minus 20. From minus 20 it became plus 10. From plus 10 it became 35, right? So if this is becoming right, if it is this becoming green and if it is increasing, that it means it is bullish. If it is going down, it is bearish. So this is our third software. Then we have one more software called Price Pulse, which will help us to identify, right, are the big companies, right? Because big companies make money in the stock market. Retail traders lose 90-95% of the time. If the big companies are buying, right, you can see that 28.746 million buy orders. That means big companies are trying to buy the stock here. It came all the way to the bottom, touched the trend line support, and big companies are buying huge. So, and then big companies want to sell somewhere here at around $26, $27, like that. So, we need to see whether the current price is close to buy orders, or close to sell orders. So, now let us take this sheet. Let us just add one example like Pfizer. Right, I think Pfizer is reporting maybe on. Let me see, Pfizer. Right, Pfizer is reporting on Tuesday morning, right? So now let me add. So Pfizer, okay, Pfizer Tuesday morning. So yeah, I'll check the predicted volatility. But now you let me know by looking at T5. Okay, sorry. Okay, now I added this Pfizer, and then let me show you the softwares one more time quickly. So this is our T5 software. If the T5 software is somewhere at the bottom and you see a green with a nice gap, that means there is a high potential for stock to move up. If the software is somewhere at the top, then there is a high possibility for a drop. So by looking at where the stock is or where the in the T5 is pointing, we can determine whether it can go up or go down. So what do you think now, Pfizer? Do you think Pfizer has a potential to go up or go down by looking at this chart? Right. So now our T5, by looking at T5, there is a high possibility for Pfizer to go up. So now what I'll do, I'll say it is good for buy. Right. Now let us go to the next software. Right. Let us close this one. Now this is our software. If it is at the bottom, that means there is a lot of big companies are buying. If it is somewhere at the top, big companies can sell it off. If you see some green candles, that means they are increasing the stake. Yellow candles, they are adding more and more stocks. They bought here, they are adding more stocks. Right, if it goes yellow means addition, then red means they are selling off. They are doing the sell off. So now if I look at this one, right, you got a green, especially if you see this is like one green, there was a small pullback and another green. That is like a double bottom. Here it is like a double bottom. It went up, small pullback, another big bounce, then it went all the way up. Again, when it goes all the way to the top, there will be a pullback. Again, it started going up, it went up. So in the same way here, by looking at this one, right, yellow means they are adding more stocks. They bought some stocks, they bought some 100K stocks, 200K stocks. Now they are adding, each company is adding more and more stocks. So by looking at this, what do you think can happen to Pfizer? Right? P88. P88 is also telling that it can go up. So now we are saying, okay, buy. Now let's go to the next one. Okay, so two softwares are telling the same thing. Now let us go and look at our price pulse software, right? If you want, you can just minimize this. Now, if you see whether so this is your trend line support, right? You are at a discount area. Whenever price comes, touch this trend line discount area. This is your resistance, trend line resistance at the top. You have 35 million sell orders, 34 million sell. That means big companies want to buy close to the bottom at the discount area. Big companies want to sell somewhere here at the top. So now we need to see whether the price is close to the bottom or close to the top. If before earnings, if price is close to where there are a lot of buy orders, that's a good opportunity for stock to move up. If price is right on Tuesday afternoon or Monday afternoon, if we see suddenly price is somewhere here, that means there can be potential for a drop. But based on this, right, assuming that tomorrow there might be small move, as of now, what do you think? Do you think it can go up or go down? Right, based on price pulse. Right, you are not just depending on, right, if you want to take a decision, you will check with 4 or 5 friends. In the same way, to get a proper decision in trading also for earnings also, you are not just depending on T5 or T888 or something. Now you see that price pulse also, there is a high possibility for going up because you are very close to the big companies are buying means they know something. They might have some insider information, or they know some Pfizer is coming up with some new vaccine, or they might have made some big revenue, whatever it is, right? If big companies are spending millions or millions of dollars by buying this many stocks, there must be some reason for it to go up. And they kept their limit order somewhere here. That means they are expecting stock to move to $3, $4 up post earnings. So price pulse is also telling it will go up. Now let's go to our fourth software. Right? This fourth software is the volume. So if I want, you can move it to top if you want to see a clear view. So now if you see the volume, right? So this is like your Friday volume. This is Thursday volume. This is Wednesday volume, Tuesday volume. So from Tuesday, here there was a drop. But from Thursday to or Wednesday to Thursday, there was suddenly the delta. Delta means the difference between buying and selling transactions. So if it is red, that means there are more sellers. If it is green, that means there are more buyers. So on Thursday, we saw nearly 30.8 buying orders, right? More buyers than sellers. Then next day also, there are 25 million more buyers. So your cumulative means the sum of these two, minus 43 plus 30 is 10.3. 10.3 plus 25 is 35.6. That means if your volume is becoming green, your cumulative is becoming green, that is an indication that that means there are a lot of big companies are interested in the stock. They are trying to take the price up. So now this software is also telling that price can go up. So now I'll say buy, buy, buy. So now I have a strong confidence from all four softwares. So it is 4 by 4. So now what I can do, PFE buy. So now what is the current price? Around 22.93. Right? For example, tomorrow I have these earnings. Then I can confidently buy PFE 23 call. Right? For example, on the Monday, only one of them, only three of them are showing it is a go, it can go up. One of them is telling it may go down. Then instead of buying 23 call, what I can do, I can sell PFE 24 put and buy 22 put. I can do a bull put spread. That means even so, if my confidence is only 3 out of 4, if I have 4 out of 4, good to buy naked calls. If I have 3 out of 4, I'll do a bull put spread. If I'm bullish, I'll do a bull put spread. If I am bearish, I'll do a bear call spread. If the confluence is little weak. If the confluence is very, very strong, I'll buy the calls. And also, one more thing you need to remember is if you have a 30K account, right? Let us say you have an options portfolio of 30,000. Maximum use 3%, approximately 3%, which is 1K per trade. So for example, if you are buying 23 call, we will go here, check what is Pfizer. Pfizer 23 call is around 45 cents. Right? For example, tomorrow morning, you see that it will be around 45 cents for 2nd May. That means now I can go ahead and buy approximately 22 contracts, right? Because each one is like $45. So suddenly if Pfizer reports some good numbers, right? You are that can make 150%, 200%, 300%, right? Because there is a high possibility because as of now, if it breaks this resistance, it can go all the way until $26. From $23, if it goes to 26, if they report some good numbers, then your $45 can become $200, $300, right? Because for 23, you are saying that to buy the stock at $23, you are paying $45. But suddenly, if stock goes to 25 or 26, you will receive 200, 300% returns. So, right, that is one example, right? Let us go to one more example. Now you have to tell me, right? Let us go to, right, tomorrow morning, there are a lot of companies which are reporting. Let us go to DPZ. Mm, Right, let us go to DPZ and again do the same thing. Let's check one by one. Right? Always we need to have a strong confluence. So for example, DPZ. So what do you think by looking at DPZ? No, I'm not taking any calls now. Right? We cannot take any calls. What I'm telling is tomorrow when market is open. So DPZ, do you think it is looking bullish or it is looking bearish based on T5? So there is a lot of space between these two lines and this is green, right? This is not somewhere at the top, right? If it is red color, it is bearish. If it is green color, it is bullish. If it is at the bottom, that is much better opportunity, but it is bullish. So now I can go and I can say deposit. Okay, based on T5, it is buy. Now let me go to the next software. So based on this, do you think it can go up or it can go down? So this is like overbought, right? It already came down, then it is too much overbought. It is somewhere at the top now, right? It should be close to 20 or 30, but it is now close to 95. That means it is at a overbought level. So now we can go and we can say based on T triple eight, it is a sell signal. Now let's go to price pulse. So if you go and see price pulse, what do you think is possible? Are you close to buy order block or sell order block? Right? If you are somewhere here, big companies are buying, but you are somewhere here, very close to a major sell block. That means companies are looking to sell off the stock. You are close to the trend line resist, right? You are close to the resistance. You are not close to the support, right? The bottom green bar is your support. This is your resistance. So by looking at price pulse, also there is a high possibility for a sell off. So again, go here and we'll say sell. Now let's go to our fourth software and check. So here, if you see, right, from minus 342, it became 502. From 502, it became 966. Here from 2.2, it became 2.72, 3.69. That means from red, it is becoming green. From cumulative also is increasing. So this is telling buy. Now, this is a risky trade, right? One T5 is telling it will go up. Your wall DV indicator is telling it will go up. By looking at price pulse and T triple eight, it seems like it may drop because they are already overbought, close to a sell order block. Then better avoid. It is right. The chances are 60-40, right? Either if it breaks this, right? So again, it is not a very huge block, but still, right? It is 1.14690. If it breaks this, then it can go till here, 387. But still, why you want to take a risk? There are hundreds of companies. You don't want to take a risk when you don't have a proper right. It is if it breaks, then there is a high possible. Otherwise, it might again drop all the way. So we can just avoid the trade because you don't have a right. You don't have 4 by 4 or you don't have 3 by 4. It is 50-50. Two are telling it will go up. Two are telling it may go down. So now let's go to the next example. Right. Hope it is making sense. Right? Are you getting it? So when you follow a systematic approach, we can have 80 to 85% of success, right? Anyone has any questions there with the DPZ, with the Domino's Pizza, or anyone think otherwise? Do you think confidently it will go up or go down? So that means there can be a lot of either there can be a big upside up move or there can be a big down move. 6% means nearly $40, right? That stock is around $500. So it can go up $40 up, go down $40 down. Anything can happen. So, right again, if you are a risky trader, by looking at this volume, by looking at T5, there is, right? Again, right, based on my analysis, it is 60% long, 40% short. So, little, right, mild bullish. But if you don't want to take a risk, you can avoid the trade, right? Because there are so many. If you don't have opportunities, then you can take a risky trade. When you have opportunities, why to take a risky trade? Let us go to the next symbol, MGM, right? Same thing, right? We have to repeat the same thing again. Now let's go to T5. So by looking at T5, what do you think? Do you think it will go up or go down? So yeah, again, there are different indicators we can use. We have T8, we have profit zone tool, but because you don't, still profit zone is not available for all of you. That's why I'm helping you with these indicators. So T5, do you think it is bullish or bearish? Right, yeah, most of you are right. It is bullish. So I'll put buy. Then let's go to the next software. T triple eight. Again, it is little overbought based on T triple eight. Already there was a bottom. It did a triple bottom, and then there was a huge move up. So again, you don't have a red candle as of now. Still, it can move up, but little risky. So it is even here also. It is more like a neutral candle because if you see red at the top, that means again it started downtrend. Here also, this is more of a neutral candle, right? That means it is in a uptrend. From the bottom, it is an uptrend, but it is little close to overbought condition. If it already went up and you see a red candle, that means the downtrend started. That means there is still potential for further move. Even with DPZ also, it is further move is, but the chance of bigger move is less because already it moved so much up. Here also, it came all the way to the bottom, started moving up. It can move little more, but the bigger moves are not possible towards the upside. So we can say neutral. Then in the same way, let's go to price pulse and see. So if you see price pulse, there is a huge sell block here. So it is more, if I look at this one, I have minus 5.25, 5.4. From 5.4, it reduced to 1.5, right? Even though it is looking green, but the volume got reduced so much. From 5.4, it became 1.5. This is also little, right? Calls are or puts are risky. We can get a bear call spread, right? What do you mean by bear call spread? If it is somewhere 31, we see that there are a lot of sellers here. They will try to bring it down. So if you do 34 and 35 bear call, you sell 34 call, you buy 35 call. Price may go here, and if it drops, then as long as it stays below this 34, all that premium is yours, right? You can do sell 34 call and buy 35 or 36 call, and you collect the premium. If the stock stays below 34, all that money is yours. If the stock goes in between 34, 35, still you may make profit. If it goes above 35, you have a limited risk. Like that, let us go to OPRA or BKU. Yeah. Now, right, initially it may take little time, but once you start seeing it, it will be more and more easy. So OPRA, it came all the way to the bottom. Now it is at a green. So this is buy. Here it came all the way to the bottom, did a double bottom, started dropping, started going up. So there is a high possibility for it to go all the way to the top. So this is also buy. Now, if I go and look at price pulse, it came all the way to the bottom, touched the trend line support, started moving up. There are sellers somewhere at 18.45, big sellers. There are buyers somewhere at the bottom. So there is a possibility for it to go up, right? Money flow is looking very good. Momentum is looking good. So price pulse also telling it will go up. DV, if you see from minus 403, it became 428. From 428 became 404. Minus 2.24 became minus 1.8. Minus 1.8 became minus 1.4. That means the negative flow is reducing. The positive flow is increasing. So now OPRA, I can go and say buy buy calls. If you want to take low risk, buy bull puts. Same thing. Let's go to BKU. Right, it came all the way to the bottom, did a double bottom here, started moving up. So bullish. This came all the way to the bottom, did a double bottom, started moving up. Bullish. This came right. DV, if you see from minus 767, it became 878 positive volume, then 1 million positive volume. From 5 million, it became 5.88. From 5.88, it became 6.88. Then price pulse. You can see that we got a buy signal. It came to the bottom, started moving up. It is breaking the resistance. It's somewhere around 36, 35, $36. You can see sellers. Until that, there are no big companies, no major sellers. So that means it is looking bullish in all four. Same thing. Let's go to CX and FMX. Right? Okay, FMX. I go here. This is already somewhere at the top. This is already somewhere at the top. Right? It came all the way to the bottom, went to the top. So there is a possibility for a drop. Then if I go and check price pulse, buyers are somewhere at 92. It went all the way to the top. Sellers are somewhere here at 114, but it already broke the resistance. So it is right. It is somewhere in between the sellers and buyers. So not exactly clear. If I look at the DV 616569, it is increasing. This is also increasing. So based on DV, it is bullish. So it is based on DV. It is buy. Price pulse is more of neutral. This one is this one is also bullish because T5 still it is not red. It is showing that it can go further up. But this one is already at the top. So they are little overbought conditions, right? Overbought, overbought. So it is better avoid, right? You are not getting a clear picture, right? Here you can see overbought. Here you can see it can go up. Here you can see more of a neutral. Then better you avoid it taking a trade for that symbol. Then let's look at RVTY. Right, RVTY. Okay. If I look at RVTY, it is at the bottom. This one is also at the bottom. Right, it came all the way to the bottom. There is a double bottom. So there is a high possibility for a move. These two are telling it will go up. Then if I go and look at price pulse, I am close to the buy order blocks. Right, major buyers are here. We go to DV and check here minus 1.56. Then it became plus. Again, it became minus 3, 1.2, minus 1. So this is also not exactly. So based on all the three, so this is buy, this is buy, this is buy, this is uh, right. So not clear or neutral. So don't buy calls. You can take, yeah, a bull put spread. So it is not for FMX. Right, FF5E. If we look at FF5E, okay, tomorrow afternoon we have FF5E. If I go and check P5, very bullish, good. If I go and check this one, it is still bullish, right? It did a double bottom, started going up. It did not, right? Once it came down, again, buyers are taking it up. Big companies are taking it up. Then if I see my DV, right, all the negative, suddenly negative became 234, 355, 403, 571. That means it is increasing. From minus, it became, from minus 392, it became 11,000 plus. From 11,000, it became 582,000. That means very huge move, right? Nearly 10x, 10x move. Now, if I go and check here, I have buyers here, 370,000. So there is a high possibility for it to go minimum till 275, 276. If it breaks this resistance, then it can go much higher, somewhere to 300 plus. So mostly this is FF5A neutral or so. So 3 out of 4 confluence, right? So here we see some sellers are there, but that too, right, it can go further up, 277, 278. Either it may go down and come down, or if there are more by two, if the report is very good, it may break this resistance and go all the way. Your next set of sellers are somewhere at around 611. So there is a high possibility for it to break. So, but instead of buying calls, if you do a bull put, your risk is minimal. Like that, right? All we need to do is once you do this exercise over the weekend, then we can easily, right? Before, right, 3 p.m. In the last 30 minutes, now you already have your all the information is already there. Now, in last 15 minutes, let us say you see some big buy orders or you see more sell orders. Then you know that, oh, it can, right? Big companies are selling or big companies are buying. If more buy orders are here, then it will break the resistance, go all the way to the top. Instead of buying bull puts, we can do calls. If you see like that, basically we can take it because last 30 minutes that will give you the latest data. Right now we are only looking at based on the current information what is possible. But before 30-40 minutes, we know exactly what can be the real time scenario because if there are any latest buy orders, then there might be some more insider information or something to the big companies they are trying to buy in last half an hour, 1 hour. That is much more right, much more gives confidence for us to go long. So like that, we can we can have this Excel sheet ready over the weekend for right because on Thursday, Friday itself you will get the calendar for next week. From that you can put a list like this. You can have everything for all your stocks. Once you have that information, then tomorrow afternoon between 2:30 to 3, I already have a bias that then I'll confirm one more time and then I can say that okay, this NXPI, this can happen. Right? Let us look at NXPI. So NXPI, by looking at this, it is bullish. By looking at this, it is bullish. By looking at price pulse, we got a buy signal. Sellers are somewhere around 217. Now it is 191. That means it is bullish based on price pulse. If I look at DV minus 3 to 3.87, 2.0, 12 million, 8.99, 12.8, 14.9. So NXPI is buy, 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 buy. So if that moves to 200, 205, 210 next day morning, you will make 100, 200%. You are opening a trade tomorrow before market close, right? Tomorrow I'll right around 2:30 we'll come here, we'll see, okay, is everything looking in the same way, right? For example, tomorrow you see more buy orders here, then you can be much more confident. Like that, right? All we are doing is watching 3, 4 different softwares and taking a trade. And then if you have buy from all four, that is the best one to go long. If you have buy from three and sell or neutral from one, go for bull puts. If you have buy from two, sell from two, then just avoid the trade. That's it. If we do this, we'll be 80 to 85% of the time. We'll be always there are exceptions, but 80 to 85% of the time we can make gains. So this is important, right? Always use 3%. Even if you make 3 or 4 successful trades, don't put more money in the next trade because you never know which trade might give loss or which trade might give profit. Always go with if you have 100,000, use 3%. If you have a right 30,000, use 3% for every trade. Right? You are risking the same. Right? It is not that you buy 10 contracts here, 10 contracts here, 10 contracts here. You have to see based on the premium. Right? For example, NXPI. NXPI, my 190 call is around $9. Then I'll buy only one contract here. Right? I'll buy one contract. If my MGM or something, right? We saw Pfizer. I'll buy 22 contracts because that cost is only 40 cents. Here the cost is $9. So based on that, you don't buy 10 contracts here, 10 contracts here. Suddenly you make 100%, but you lose here because the premiums are so expensive, you will lose a lot of money here. So that's why always use a consistent position size. Then when you make 8 out of 10 trades, you will be profitable. So again, right, if you can follow this approach, that is well and good, right? All we are doing is identifying some stocks with good volatility or which are well-known stocks. Then use the confluence. If confluence is strong from all four different softwares, good opportunity. We can buy calls or puts based on the confluence. If it is only 3 out of 4, and then you do bull puts or bear calls. and only risk approximately 3% of account size. So, so this is one way where you can learn, you can follow, and you can take the trades. Or if you are someone who is completely busy with your full-time jobs, or you don't know about bull puts, bear calls, you know only about buying call, buying put, right? Earnings, because suddenly there can be a lot of up move, down move, right? If you buy calls, put, sometimes it can be risky also. So we, based on the confidence, based on the price, all those things, we should look whether call buy bull puts is better, bear calls is better, call is better, put is better, like that. So using these tools, we are making 80 to 85% success. But for new members, the problem is one is suddenly, let us say out of 4 or 5 trades, you pick only one trade. You may not know what is an XPI, right? Only if you see Microsoft or Google, you will buy. If you see Nvidia, you will buy. But you don't know about an XPI, or you don't know about, right? Let us say Domino's Pizza or something. Then when you're picking and choosing, only if that becomes a loss, then suddenly the assignment of stocks can happen, right? Then you will not be able to, if you have a small account like 25,000 or 30,000, suddenly the first 1 or 2 trades became loss, then you will not be able to take the other trades. And using that consistent position size also needs practice. So if you're not able to use that also, that can be a problem. Suddenly you make 2 profits, suddenly we become greedy. In the third trade, we try to put lot of money, we can make losses. And also because of primary jobs, the 230 to 3, you have to go and check whether it is bullish or bearish in the last 30 minutes, because that is where you can see the latest buy orders or sell order blocks. You can see what is the delta volume is showing, right, for the day, right? We can see as of now, we can see for Friday. Based on that, we are taking a bias. But tomorrow, in the last 30 minutes, if you see for the daily what is the volume, you will get much more confidence, much more clarity. Because of your primary jobs, if you are busy in that 2 to 3 p.m. Central, you may not be able to analyze, or you may not be able to take the trades. So because of this, we started this earnings fund in the so you have two options. So one is where you get a guaranteed 6% dividend for every quarter. So irrespective of trade performance, whether we make money, we don't make money, we make losses, you get 6% at the end of the quarter. The second option is you pay $500 plus your share amount. That $500 is mainly you will get a K1, right? Everybody will get a K1, but these members, right, they all will be part of an LLC. Then they will get a K1 at the end of the year. And then whatever profit we make at the end of the quarter, you get 70% of the profit. We company get 30% of the profit. So that is the second option. So if you are a low risk trader, you don't want to take any risk, right? Because in the option two, you have right, risk of losing also. If we lose, suddenly something happens, some bad trades happen, or some strategy is not working, or suddenly there is a black swan event, some news event, Trump announces something, you buy something, but because of India Pakistan war, India China war, US China war, whatever, right? Whether it is a trade war, whether it is a real war, things can happen, black swan events can happen. Then there is a risk of losing also in option two. In option one, it is more like you have a low risk, you don't need to worry about anything. So in the last funds which we started end of January, in first week of February, we made around 13% until yesterday. So you have that option. One is you can learn, right? You can follow the strategy, just whatever I explained. Just you can do it by yourself, right? The second option is where you can be part of this, and you can you will be joined into a channel, and you will be, so this is more like a passive. Whether you are full time or whether you are busy with your job, or you don't need to worry. At the end of the day, you will see what trades we took, how much profit or loss we made for the day. Every week, end of the week, you get some reports with how much profit we made. At the end of the month, right, once IBKR publishes the monthly report, you get the monthly report of all the trades we took for that month. Like that, you will have all the information. So it is up to you, based on, right, because yeah, you- if you have time, then you learning and right, yeah. I posted the link there. If anybody is interested, they can fill the information. So this is basically the delta volume, which shows RCTV is the delta volume. It shows like how many buyers, how many sellers on the day. If you see positive volume, that means there are more buyers than the sellers. This is the cumulative, which is the sum of these two, right? 1.8, here it is 8.99 plus 3.87 is 12.86, 12.86 plus. So if this is increasing from 3.7, it became 2.6, 6.7, 7.7, 10.1, 12 million, 8.9, 12.86, 14. So it is from 8.9, it became 12.8. From 12.8, it became 14.9. That means there are more and more buyers are interested to buy an XPI. So that is a positive sign. So if Monday afternoon we see that this become 15 million, 16 million, that gives us more confidence. Or suddenly you see a big sell, more and more sellers tomorrow. Then that means the big companies might got some insider information that this will drop. So like that, we'll always look at the right. You never depend on one indicator. You always look at the confluence. See, yeah, most probably, right? There is very high possibility for an XPA to go up tomorrow by looking at the current numbers. But yeah, tomorrow afternoon that will give us more a better picture. But by looking at right, our target can be again. You can buy stocks, you can buy options, you can do a bull put, you can do a call. If you buy a call and if it goes all the way to $210, then that will make 100, 150% also. So there will be right. It is there will be always profits. There will be losses. But if you maintain that consistent position size, yeah, risking the same amount for every trade will be green at the end of the week, at the end of the month. So yeah, that's it, everyone. So basically, that's what I wanted to explain, everyone. So bull put, we can lose more than 1,000 for 30K account. No, you don't lose, right? That's what I'm trying to explain you. So for example, let us say, explained in previous sessions also. So let's go to this, right? Let us say Pfizer, we are bearish for Pfizer. So Pfizer, you are selling, or what is we are bullish, or okay, we are bullish for Pfizer. So if you are doing a bull put spread, you are selling 24 put, let us say, and buying 22 put as a hedge, right? For example, if you go here and say Pfizer, and you are, let us say, you do a vertical spread, sell vertical. Now you are doing 24 and 22. You are selling 24 put and buying 22 put, and you are collecting $1, nearly 103, $103. So sell 24 put and buying 24 put and collect 103. So that is the you are doing a bull put because we are bullish for Pfizer stock as confidence is strong from 3 to 4 different softwares. So one option is I can buy Pfizer 23 call. Pfizer 23 call at So for example, 23 call is around 45 cents. Then 45 cents. So if $1,000 is my investment for every trade, I'll buy around 23 or 24 contracts. Because for every contract I am spending $45. Whereas if I am doing a bull put, right, this is high risk, high returns. So if it stays choppy, you'll lose all that $1,000. If it goes to 24, 25, 26, you may make 200%, 300%. This is strategy one, where you have a high risk and high return. You buy 23 call at 45 cents. If you want to spend $1,000, you buy 23 contracts. So this is a strategy two, low risk, low returns. So I'm doing a sell 24p and buy 22p and collect 103 credit. That means what is the risk is $200 between the, right? What you have to see what is the difference. 24p, 22p means $2 difference. With 100 stocks, that is $200, right? Total spread difference is $200. Credit collected is around $100 or 103. So approximate risk is $100, right? So now I'll buy 10 contracts. So because for each contract, my risk is 100, right? Because the difference is $2, that means 200. The credit collected is 103, so approximately 100. So 200 minus 100, that means my risk for every contract I buy is $100. So if I want to buy calls, I'll buy 23 contracts. If I want to do a bull put, I'll do 10 contracts. So if stock stays above 24, 100% gain. Stock is around 23. Still you will make, because you already collected 103 credit. Still you will make gains. Stock stays below 22. Your maximum risk is $100, right? Because you already have a stop loss, right? You are selling 24, buying 22. If it goes to 20 or 19 or 15, whatever it is, you already have a hedge there. You are buying a 22 put. You are not just selling 24 put. You are selling and also buying a put. So if it stays 24 or above, full profit. If it stays between 23, 24 also, you'll make profit. If it stays between 23 and 22, that is where you have a risk. If it goes below 22 also, you have the same risk, whether it stays at 23 or 22 or 20, 20 19, whatever it is, your risk is same $100. Whereas here, so here, if it goes to 26 also, you are making only 100% gain. If it goes to $30 also, you are only making 100% gain. If it goes down also, from instead of going up, it stays at choppy. Also, you will make 100% gains. Here, only if it goes up, you will make gains. But suddenly it goes to 25 or 26. You will make 200, 300%. If it stays at 23, then you are losing all that $45 per contract. So that is what you need to understand, right? With a bull put, you already have a hedge, right? You are selling a put, you are buying a put, and you are collecting a credit. But here you have a high risk and high return potential. Here you have a low risk and low return potential. But only thing is here you should not buy 10 contracts and 10 or 23 contracts and 23 contracts. Here your risk is $100 for every contract. Because your risk is 1,000, you only do 10 contracts. Here your risk is $45, so you can do 23 contracts. Now you can do just one single click. You don't need to do two transactions, right? Just now I have shown you. Right? If you just click on, you don't need to do sell first and buy first. If you just do confirm and send, that's it. You are collecting $103 credit, right? You are doing only one transaction, whether you do bull put or bear call. If you are bearish, you do the bear calls. If you are bullish, you do the on the put side, you do confirm and send. That is a vertical spread. You are collecting credit because when you collect the credit, you are more like a seller, right? When you are a buyer of a stock, right? Whenever you are a buyer of calls or buyer of puts, you need a big move in that direction, right? If you are buying a call, it should move big upside. If you are buying a put, you should move big in the downside. So because generally before earnings, because of implied volatility, theta decay, all those reasons, the premiums will be very, very expensive. So when you are buying calls or puts, if you don't have a big move, you will lose. But if you are more of a doing a bull put or bear call, you are more like a seller, right? More than a buyer, you are more of a seller. So that implied volatility will, so if it stays choppy, or right, let us say, let's take all the conditions. So you are buying a call only if price moves big, buying a Pfizer 23 call at 0.45. Only if price moves big than 23.45, that means it should go to 24 or 24.1 or something. You will make nice gains. Even if it moves to 23.1, you may lose. Right? From 23, it went to 23.1 because of the implied volatility theta decay. Your premiums immediately after the earnings day, the IV crush will happen. You may lose. But if I buy a 24p by 22p bull put, price goes above 24, 100% gain. Price goes above 23.5, nearly 50% gain. Price goes above 23, maybe 30% gain. Next day morning, price stays little below 23, you can still make gains due to IV crush. Only if price goes below 22 or in between 22 to 22.9, you have same risk, right? Whether it goes below 20, whether it goes to 20, 19, 18, or 22 to 22.9, you have the similar risk. But if it stays above 24 or above 23.5, above 23, at around 23 also, you can make. So if it stays choppy, you'll make money. If it goes up, you'll make money. Whereas only if it goes down, you have a risk. Goes more down, right? Much more. So already we are looking at the confluence. We are looking different factors, and then we are considering that, okay, it is looking very bullish in all the four. So that's why either you do this or you do this. We have 85-90% chance of making money. So when you do this, you have 70% chance. When you do this, you have 85-90% chance of making money. So your risk is minimal. You may make less profit, but your risk is less here compared to this one. So that's what by doing a bull put you have, because you are more like a seller. So the theta decay, implied volatility, all those will be your advantage. When you are buying a call, all will be against you. because immediately after earnings, for example, you spend 45 cents for each contract. That means out of that 45 cents, 15 cents will be for implied volatility. 5 cents will be for theta decay. So immediately next day morning, already it got reduced by 20 cents. Whether stock goes little bit up also, you may not make profit if stock is not moving very big. Only if stock moves big, you will make big profits. If stock moves a little bit, you may not. So that's why always naked calls, naked puts always have higher risk and higher reward. When you do bull puts or bear calls, you have lower risk and medium returns. So that's how you need to understand and you need to use the bull puts and bear calls where you have higher chance of success. Yeah, you can also do both, right? You can also, right? For example, you are collecting the money, right? You are doing a bull put. That means already you are collecting 103 credit. Now use some of that money and you buy a call. So if it goes up, you make big profits from here, you make small, medium profits from here. Otherwise, you have higher 90% chance of success here. You have 70% chance of success here. Even if you lose also, you are already you collected some money where you can keep 90% of the time. This money you are using to buy a call. So your risk is minimal. You are collecting first and using that money to buy a call. If it goes up, you make 200, 300% here, you make 100% here. If it goes down, whatever you collected here, you are losing here. So like that, your risk will be minimal. Yeah, always you can do both also. So again, right, if the confluence is very, very strong, that is the best strategy. You do this, use that money, buy some calls, right? If you are doing 20, 10 contracts here, you do some 5 contracts, you buy naked calls. If confluence is only weak, then you only don't buy naked calls at that point of time. Only 3 out of 4, then only do the bull put spread. If 4 out of 4, you can do bull puts. Use that you already collected some money, which you can keep 90% of the time. Then use that money and buy some naked calls. So suddenly, if it moves as expected, mostly right, there is very very high possibility because you are not just looking at one software. 4 different softwares are telling you it, right. This came all the way to the bottom, started moving up. So Pfizer is a good company. It went all the way to the top. Just before few days, it was at around 28, $29. Now it is at around $23. That means there is a big drop. So there is a potential big companies are buying. This is telling it will go up. This is telling it will go up. This is right. This is increasing from 10 million. It became 35 million. Right. From minus 43, it became 30 million. From 30, so there are 30.8 more buyers than the sellers. There are 25 million more buyers than the sellers. So there is very, very high possibility because you are not just looking at one software, right? Whenever you want to buy a home, buy something, you will check with 2, 3 friends. If all 3 friends are telling the same thing, right, to buy in some community, you will buy it. In the same way here also, you see that 4 softwares are telling you the same thing, right? Your T5 price came all the way down, nice big bounce, small pullback, started moving up. It did a double bottom, started moving up. It came all the way down, started moving up. You can see a nice gap. So very, very high possibility for an XPI, Pfizer to go big. So like this, when you do a proper, right, all you are doing is spending some 1 hour on a weekend. You can have right 1.5 hour on a weekend. You will have all this ready. Right, one trade is enough for you to make $500, $1,000. That right, that is good enough where you can that can help you to pay your EMIs or that can help you to take care of lot of things. Whenever something is not proper, just avoid a trade. You have hundreds of companies. Every day you have 10, 20 companies are reporting. We don't need to, right? We don't need to take each and every trade. There are so many 20 companies, 20 companies on Tuesday, 20 companies on Wednesday, 20 companies on Thursday. So we don't need to get trade everything. Look at these ones, see which one is looking good. And based on your risk or based on your account size, if you take, you have 85%, 90% chance of making profits. Okay, one last picker we'll see, Spotify. Again, right, before 30 minutes, that can give us the best picture. Now, Spotify, if you see, daily is looking very bullish, right? P5 is telling it there is a huge potential. Still, there is a lot of upside move. So this is good. Then this one, it is little overbought, right? It came all the way down, started moving up, went all the again. There are no red candles. Still, there are a lot of right. Yellow means increase. Came down, you got a bounce, and by they are increasing the number of stocks. Then if I look at DV minus 1.42, 1.05, 1.05 to 2.24. Minus 4, it became minus 3. From minus 3, it became minus 980. So DV is also looking good. If I look at price pulse, I got a strong buy. My momentum is completely green. My money flow is completely green. Trend is very bullish. Trend strength is very good. There is very high possibility for, right? As of now, we don't see even any big sell order blocks. So price came all the way down, went all the way up. So yeah, Spotify is also looking very bullish. So $650 is the 652 is the next resistance. Very high possibility for, because there are no sellers here. We don't see any sellers here. So Spotify is also looking bullish. So yeah, 652 is possible. It will break this one. Mostly we'll see 652 on Spotify post earnings. That is the previous resistance. So like that, yeah, once you analyze, no, if it is breaking the trend line, that means it is a breakout, right? If it is touching the trend line and started reversing, that means it will go down. But if it broke the resistance, that means that is a breakout signal, right? Now this will become the support, right? It doesn't mean always it will go up and come down. Sometimes it can break. If there is a breakout, that means it is very bullish. Sellers are not able to bring the price down from the resistance. Now the resistance will become support, and then buyers are more interested to take it further up. Yeah, T888 also works for day trading. Only thing is you need to look in 5 minutes. So to know the implied volatility, you need to see what is the right. For example, if I go to DPZ, if I see that approximately it can move $36, right? $36 out of 487 is approximately 6 to 7%. So that is my implied volatility. We can see what is how much price it can move. Based on that, you can calculate what is the percentage. 36, right? It is saying that it can move $36 plus or minus after the earnings this week before 2nd May. From 487, it can go plus 32 or minus 32, which is approximately 6 to 7%. So that is how we can put the implied volatility here, predicted volatility. So Tesla is it overbought now? We have around 290 is a possible resistance. Once it goes to 290, there can be a pullback. If it breaks 290, then 300, it will move to 300. But it already moved so much, right? From $252 in last 2 3 days, it moved so much. There was a consolidation, right? It started moving here. It went all the way up. There was some consolidation. You got more buyers. Then it went all the way up. Now you have some sellers here. There can be a pullback, and then again next time, whenever it starts moving up, it will go to 302. Right? Even for previous week earnings also, you can go and see how Tesla was before the earnings, how it started moving, so that you can back test. So yeah, that's it, everyone. So yeah, yeah, I'll share the form one more time if anyone is interested. Or anyone, you can also put a email to me if anyone has any other questions. All it is about practice and taking time to learn, and then yeah, putting that little extra effort. So yeah, if you use it for 5 minutes, then basically in the morning time for futures or anything, we can use in 5 minutes and take the trades. Whenever it goes to the top, it will drop, right? It should go up, and then you should see a red candle, then you can it will drop. If it comes all the way to the bottom, you see a blue candle or green candle, it will go all the way up. Yeah, every Wednesday, Thursday, we generally have events. I'll share it. Generally, this week, this Wednesday or Thursday, we may have some CPA or something. So today at 4 p.m., we have a setup session for the indicators, and yeah, we'll help everyone. Yeah. Okay, everyone. I'll share the setup session link in the premium channel. Have a nice rest of the day, everyone. Talk to you later.